so I decided to get in at like 92, which is again is not a good entry from my opinion. But I'm hoping to take it a level to level. Next level's at 98, so we'll see if it gets up there. Put my stops, below this low. See, I mean, the problem is the zone is played out for multiple moves. So whether it holds out again is kind of anybody's guess. We'll see. i.e. I'm not going to leave a runner, because we've been chopping around a lot, and a lot of people are expecting a trend day today. So if a lot of people are expecting it, may or may not get it. I'm just going to trade level to level and stack my consistent gains day after day. My goal is I want to stack consistent profits day after day. Stop looking for home run moves. Trying to catch home run moves is what historically hurt me. This most recent bout of losses came about from just impulse trading, a lot of impulse trading, oversizing. I had a good run up the past week, a really good run up. And I gave back essentially most of those gains, and that was just due to carelessness, me being careless, over trading, oversizing, not being patient. And so I really want to get back into the rhythm of really just taking it slow, taking one trade, max 3 trades per day, calling it a day, not oversizing, trading level to level, not trying to catch runners, or not trying to catch full-size runners, because that's not realistic. The market's going to trap you. Even if there's a really A++ opportunity and you think you're going to be smart by taking a full-size position and letting that run, I can guarantee you the market's not going to let you have it 100%. If you try to catch, if you try to hold on to a full-size runner, so what that means is so a runner is essentially a leftover piece of your position after you've taken the majority of your position off, taking profits off of the majority of your position, and then you let a small portion of that position just run up continually without take profit, and then you just trail your stop up. The higher and higher it goes. So essentially, you're essentially in a state where you could theoretically make unlimited profit. That's the theory. And then so if you take that same concept and apply it to a full-size position, so for example, right now I'm trading 2 contract positions for the span of 7 days, and I'm doing that to build my confidence, to build my consistency, and honestly just to build good habits, to build that I've learned about myself is I can be profitable. I can make money in the market. I know this. This is factual. I know this about myself. I have no problem making money. Okay? The problem lies keeping money. The problem lies not getting your ego too inflated to where you think you can just continuously make money at random or like at will, and then thinking that you're just going to continue to grow and then you end up busting your dick. So that's the issue. So before, hopefully I don't get to that point yet, but if I end up doing, I will at least want to have withdrawn a good portion of my profits before having even the ability or the chance to blow up. That's so again, market analysis for today. You guys see here, we've been basing after a few weeks of straight red days, just consistently like flushing. If you can see, so let me explain kind of where all this started. Alright, so we had, and this is back in the beginning of February, end of January, we started to build this megaphone pattern. And as you can see, this megaphone pattern broke down at 1698.96. So whenever we're building out a structure, whenever price builds out a structure, that becomes like a temporary, I don't know, like a temporary stronghold for price. And so if that structure breaks down, we can expect aggressive selling, like we saw here. And then we'll get aggressive selling until we backtest the next structure that we created. So what was that next structure? So after this big mess, this megaphone pattern, the next structure was it was this 3-week base that we had built a few months ago. So as you can see, this huge downside, this huge range right here, up and down, up and down. So this is the next structure, that 3-week base. So when the price comes down, we backtest that previous structure, and we may get a bounce off of it as we did here. But if the bulls are not strong enough to reclaim, the key thing that you want to see, if you want to go back up, is we have to reclaim the structure that we broke down, right? So here we broke down 96 and 98, which is support of this megaphone structure. Then we want to see us come back here and backtest it, maybe dip a little bit, but eventually reclaim it. If we can reclaim it, that shows that, you know, bulls are strong and that we're headed for more upside. But we didn't see that. We didn't even get up there. We didn't even get a chance to backtest it. We literally sold off, had a little bounce. We actually broke through the 64 support, which is again support of this structure that you can see right here. So we broke support of the structure, and then we had some aggressive selling, and then what do we see? We backtested it. Generally, when you break down a structure, the price will go to backtest it. So we broke it down, we had a little bounce, we backtested it, and then guess what? We sold off again. So whenever you backtest an area that previously broke down, it's good for an initial backtest short, okay? So that's why those are essentially like pretty, you know, they're pretty reliable setups, they're pretty reliable trades. If we break it down and we go to backtest a structure, backtest a previously broken support, you can expect a short from that backtest, okay? And this is pretty reliable. As you can see, we barely backtested it here, got a nice flush, but then we bounced back up. But as you can see, we did a failed breakout and then based it and we rejected again. So again, we rejected until we test the next support. So the next support would have been 20 to 24, which is now support of this structure right here. So this structure right here, and it was a failed, it was like essentially a lower support for this other structure right here. Support's gonna have multiple structures, they can have multiple resistances, and they can have mid pivots. So I guess really the 60, 65 stop that on our
Money
runner.
comes to me quickly and easily.
So essentially the process just repeats over and over. So we're playing with prior breakdown level. Alright. So back to the trades. So as you can see now we're back down in this basic structure. Honestly, I know it's kind of almost, but I think I'm gonna take the short right here. I like it. I'm getting rid of technically bears are still in control, so and it seems like we're kind of stuck to the 72-68 level, so that's where I'm going to trade around. If bears want to retest that again, not back to another test of 72-68 support. having price there over and over and over again to try to break through that level. And it's a good indication that perhaps on the next test, after it's flushed and cracked so many times, that eventually it's going to come to a point where the zone just collapses and we start to just waterfall through. I'm not saying that that's what's going to happen today, but it does increase the chances. Acceptance definitely increases the chances of a zone breaking. But we just have to see ultimately what happens, because price can do anything. So we'll have to wait and see. If anything, the zone could feel breakdown once again. If it can feel breakdown, we can flush yesterday's low, or we can flush Tuesday's low, and if we reclaim it, we're just back to the upside, you know. So like I said, anything could happen. All the market is, all trading really is buyers versus sellers. That's what support and resistance is, you know. If you want to see upside, then you're hoping that your supports hold stronger than your resistances. If you want to see if the market goes down, then that's an indication that the resistances are holding stronger than supports, right? Price will always take the path of least resistance. That's actually a quote by Jesse Livermore, one of the most famous traders out there, who made a killing in the bear market in the 1910s, I believe, or maybe 1920s. But price will always take the path of least resistance. Okay, so you always have to think about that. So our first TP got hit at 72, and as you can see, there's no real retracements. 72 got hit, and there's no demand there. Like, the buyers are not here to pick it back up. Now, I could be wrong, maybe the buyers step in later, but what I'm seeing is price just hovering over 72. No really big reaction. Yeah, a little up to 74. What I may do, and this is just, you know, this is good trading, this is good risk management. If the price gets back to my entry point, or a little above, I may add another one, leave that as a runner, and have my second contract hit take profit, and have my third as just a runner straight to the downside. We'll see. We shall see what happens. upside resistance is. You know, we rejected at this mid pivot, this 55.98 mid pivot. We rejected it and are continuing back to the zone of support. So then that tells me, you know, the market still has weakness in it.
Taking action opens progression. With magic in harvesting the
That's my screen capture file. All right, how about now? Is the music still louder than me? How long is that going on for? One day, guys. One day I'll get the settings right. I promise. Basically, what I was saying, if you didn't catch it, long story short, we've been in a downward trajectory after the break of the megaphone support, and every time we break down a structure, we back test it for an initial short again, and if we can't clear it, we just continue downwards. So basically that process has happened over and over and over again because we couldn't reclaim the structure that we broke down, or we couldn't reclaim the support of the structure that broke down, so we just continue selling violently, and we haven't really yet to back test the majority of the supports that we broke down. But basically what I was talking about level acceptance. So level acceptance is when you see a support zone that's been tested multiple times. Generally, on a major support, the first test will give you a nice firm bounce, right? A nice momentous bounce, like this first one right here. See this one? Tap 72 and it went straight up, okay? That's what you want to see on a clean, untested major support. That tells you it's a major support. But then afterwards, price can come back, especially if it can't clear the overhead resistances. Price will come back and do what's called a failed breakdown, meaning it'll flush the zone, trap people going short, maybe test another major support below it, recover that zone, and then go even higher, okay? And if it still can't clear overhead resistances, price will revisit the zone again. And it can do this multiple times, and it can do multiple failed breakdowns until one of two things happens. Either the overhead resistance is clear or the below supports fail. But the thing is, the more times a support tests, the weaker it gets. And a zone can fail breakdown multiple times, as you see here. The thing to notice is this collective act of testing the zone. So you have a level test, failed breakdown, level test, failed breakdown, level test, failed breakdown, failed breakdown. This cumulative act of actually testing the zone is known as acceptance. Acceptance basically means that price is testing the zone and it's poised to potentially break through it, okay? It just means that like price is eventually going to get to the zone again where it tests it, and most likely it breaks down the zone. This is probably, because I have a feeling I'm probably just going to move it here. Yeah, it's too much, it's a lot of risk, but I'll probably take it off before that. I just don't really want to get stopped out prematurely, especially if we can't even hold above 84. I don't want to get stopped out prematurely, but we'll see. So basically that's level acceptance. So on the 7th or 8th, so far we've tested this level 1, 2, 3, 4, 5, 6, 7, 8 times. So with each test comes more weakness, right? It's like you're giving a little bit away of the zone each time. So on the 9th or 10th or 11th, you know, the probabilities are that this zone eventually breaks through. And so that's essentially why I took this short. And I mean, initially it was just at least a level to level test, which I got the first TP, and then my second TP is at 68. But as you can see, we touched 72, we bounced off of it, and so we're kind of just still in this limbo phase. But my assessment is that we will at least come back down to retest 68, and I'll leave a runner, and then I'll trail the stop on the runner. So I originally entered this position with 2 contracts. I got a TP on one of them, re-entered when price came back to my entry point, and now I'm waiting for price to go back down, test TP2 to get me out of my technically my second contract, and then I'll have one contract as a runner if we have more downside, and I'll trail the stop to break even. So that's the plan for today, but we'll see what happens. Yeah. And I'll probably end the stream after this trade works out, or at least until my TP2 hits. Once my TP2 hits, I'll probably just call it, and I'll show you guys trailing my stop to break even for the runner contract. And most likely the runner will stop out at break even, which is fine. I mean, that's what we expect. That's all runner does for you. The runner just gives you exposure on those, those unicorn days when we have like high momentum and like really strong trend day, like to one side or the other. So black. Actually, no, espresso. Espresso. Yeah. Weather's looking pretty gray outside. It's very rainy. Alright, so as you can see, we're nearing TP2. We're back at 72. So we did get a nice little bounce. It would have been good for a nice level-to-level move from, like, if you were to have taken it at, like, I don't know, again, if your entry was 77, I like to take, I mean, that's on a failed breakdown. On a level test, you probably want to do it much closer, but on a failed breakdown, I do 5 points above the breakdown level. But for a level test, I'd imagine you wanna get in closer so your R/R is better. So maybe if it tests at 72, maybe get in at 73 or 74. It would have worked out for a nice level to level move to 84. You know, that's a 10-point move. That's, you know, that's not to be gawked at. So that's what goes to show. It's like, it doesn't matter what your bias is. If you have a bias, okay, so TP2 got hit. I am going to now move my stop to break even. And we'll just, I mean, there's really nothing we need to do at this point. There's nothing really to manage. I mean, if we get stopped out, we get stopped out. It's break even, so not really. I mean, technically I am giving back profits, but I'm not. Tell you what, I will probably take the third off at 58, because this is a strong zone, I'm not gonna lie. Do we potentially flush this zone? Yes. We potentially flush it. Now, do we flush it for failed breakdown, or do we flush it for continuation? That remains to be seen. But we do have a bit of a risk for reversal. Gotta go, bro. Please do this more. I will try. Thanks, my friend. Have a good day. This is really just for anybody still watching, or probably nobody's watching this, but it's out there. It's, you know, it's good education. So I know I said that this, okay, I'm going to leave this runner in case we flush to the downside, which we may continue flush to the downside, but my concern is this is a strong zone, even though it's been tested multiple times and we've technically accepted it and we are at risk of flushing it. Overall, this zone is very strong, and 58, as you can see, like, there's a bunch of bounces off 58. We had a failed breakdown on Tuesday, and I got stopped out. All right. Like I said, 68's a strong zone. This is a strong zone, so there's gonna be some impulse. There's gonna be some impulse bounces. Honestly, if it continues to show weakness, I would like to try this trade again. Probably move everything up though. I don't want to get in like right now, but I just want to wait and see. I want to leave limit orders just to kind of wait and see what happens. Because again, I know 72.68 is much weaker right now. And I'd like to take advantage of it, honestly. If you have the option of taking the same trade twice, I would do it, because you know it's kind of a high probability thing. You know, if it happened once, there is a chance it can happen again. So, and as you can see, it already happened multiple times. It happened a lot. So again, price likes to take the path of least resistance. What is that? If resistances can't clear, then we go back down to supports. If supports can't hold, we flush through. If supports continue to hold, we go back up to resistance, testing resistance again. And the same concept goes for resistances as well. Everything that I just talked about for supports, the same thing applies to resistances. So if resistances test multiple times, you have a level test, short, level test, failed breakout, short, another failed breakout, rejection, another failed breakout, rejection, and then eventually we get to it and we break through. Now, as you can see, we've rejected multiple times and we're actually forming like lower highs, which again, not good for the buyer's case, but you just have to wait to see what price does. Alright guys, it is 8 o'clock, so I think I'm gonna wrap it up here. Everybody have a safe trading day. And I will see you next time.